probably printed everything for you guys, so you've got the whole set. Those are the notes that I'll be using week on week. I'll be referencing the material in the textbook as well when looking at examples and the application. There is a textbook as well that UNISA has prescribed for you. It's volume 1. There are different volumes. The first volume is the one that all the FAC1500 modules cover. So this isn't the only accounting module. There are others. There's 1500, there's 1501, 1502, and then you guys are doing the third one, which is specific to your group, okay, your cohorts in terms of law practitioners. Right, obviously just background in terms of my online business, providing online courses from UNISA point of view and others as well. You can go and have a look at that if you want to. We will be looking at live classes weekly, and then you've got the custom support materials that we've given you. You've got the entire 16 units. I'll be using that throughout the 9 weeks. We will go through live walkthroughs of sample questions and examples. Okay, and we'll cover a minimum of 2 past papers at a later stage. I've got lots and lots and lots of old past papers. So I want to try get the newer ones. So if you guys have access to the last semester paper, they might or might not have posted that yet. If they do, then just email that to me and then we'll cover that because a lot of the previous ones I've already covered. Okay, so as I said, you guys have the videos that you can access and your emails have access to that video. So you have to log into your Google Gmail account and then you'll have the links for all the content that we cover weekly as well as any content that I've covered before with the 1503 group. So for example, past papers, past assignments, I'll give you guys access to that so you have more questions and more answers that you can go through and practice. Okay, but I will cover 2 with you live from start to finish so you can see how to actually approach it. Okay, if you Skype or WhatsApp or just leave a question. Okay, study guide you need to with. That's the study guide. It's 100 content. We've obviously got quite a few topics to get through. If we look at your 1503 module, you've got nature of accounting, okay? You've got elements of financial statements and basic accounting. You've got a bit about that. Then you've got a bit about bank charges, interest received, and then you've got some theory at the end of the chapter. Okay, so 9 study units in total. Okay, that's the content in the actual study guide that UNISA has given you. Right, try work consistently, so if you just keep up with me the actual course, because accounting is a subject that you need to practice. It's very practical. It's not something that you can study. You guys are obviously covering other subjects, like commercial law, family law, or whatever. Okay, and those courses can be studied maybe before the actual exam. Okay, you can cram that because it's studying. With this, yes, there is some studying that you need to do, but a lot of it is application, and that's where the practicing comes into it. Because you all know where the clutch is, you know where the gears are, you know where the indicator and the steering wheel is, but that doesn't make you a better driver. Okay, when we went for the drivers, we had to practice. Okay, now it's like second nature to us, okay, because we've been driving for so long. Right, the same thing can apply here. If you practice throughout the semester, it makes it a bit easier in terms of that ongoing consolidation of the knowledge that you have, and it also helps you just to keep on track with the material that we're covering week by week. There is a textbook that they do prescribe, and that's the basic textbook that they use throughout all the modules, and those textbooks are very good if you want to look at additional information. The material here was used in terms of the study guide as well as the textbook, so I've tried to pull from both to give you what you need in order to complete the course. Right, in terms of the assignments, the first assignment is due next week Monday, which is very soon. So what I'll do with that is I'll film the actual answers and then I'll send that to you guys. And that's why I want you to please write down your email address so you don't get it, I'll do it probably tonight, so then at least you guys have it. If you don't get the email because I can't make out the letters or numbers on the email in terms of writing, then just send me a mail and ask me for it, and then I'll make sure you get it. Okay? Because sometimes I might misread a letter or a number on the email and you might not get it. Okay? Because the next time we'll meet will be next week, and by then you would have already have submitted the first assignment. Okay? So if you have been studying yourselves, that's always a good idea. You can try, do the assignment ahead of time and then practice. Okay? I'm not expecting you guys to, because obviously we're starting class today, but assignment 2 is probably going to be better because we'll have more time to prepare for it. Okay, pre-reading is important. If you can, try go through the chapters ahead of time. You can make notes on the notes, and if you want to, try get hold of the textbook and always ask questions. Either cover questions that they have in the study guide or cover questions in the textbook, but ask questions. There's no such thing as a silly question. We're here to learn, we're here to stop me during the class and ask me. I'm more than happy to answer questions. And then something that the UNISA study guide in the course normally also talks about is forming a study group. That can obviously help you. Okay, so in terms of basic principles, we need to look at these key areas. So we've got here, the nature of accounting is all background, that's theory, that you can just study. Then you've got rules here, and I've split the rules into different sections: financial performance and financial position, and then you've got this whole entry, this double entry system, which is a debit and a credit. Okay, just to get an idea of background-wise, have you guys covered accounting at all before? Maybe those of you that took it at school, or never ever? Okay, so everybody is blank slate. Okay, that's actually the best scenario to be in, because sometimes when you study accounting elsewhere, you get the wrong foundation, and if the foundation's bad, then you've got to undo what you've learned, start over. Right, so at least now it's a clean slate. You'll have the most important bits and pieces that you need, and you can always take this further if you want to. Alright, as lawyers, you can spend, maybe if like the commerce side of things attracts you more, and tax, that type of thing, then at some point in time you might want to study an accounting or a tax specific course to obviously specialize in a specific area that you're wanting to work in. So to start off, I just want to get a general view on what you guys think accounting is. Is it important? Why do you think it's important? Like, what's the view? What do you think the subject is? Okay, so maybe if I ask you guys, maybe you just give me your names, so I can also learn them. So let's start here. Okay, so importance was great in terms of, you mentioned like trust, specific to lawyers, okay, people dealing in that area. You're gonna definitely have to separate your client's money from yours, and that's something. So that's definitely part of the importance bit that we could use there to answer that question. But if we talk about the what is accounting, like what is it? So next, your name? Kosi. Okay, Kosi, what is accounting? Okay. Okay, numbers. Okay, good. Numbers, yes, but mainly finance, right? Okay, so if we're looking at finance, accounting is a way to represent information that's money related or numbers related, but specific to business. Okay, so in all areas of accounting, there are numbers that you need to present for people to make decisions. So finance is probably what we're going to be looking at most, because those numbers relate to income, expense, and so on. So those are things that we need to obviously identify. Okay, next, anything else that you can add to those answers? so money is the focus. It definitely is when it comes to the bookkeeping and the accounting. So the bookkeeping is like the record keeping of the business. Right, so should we keep our invoices? Yes. Okay, if you're running a business, you should, definitely. Right, even as an individual, managing your finance would be a form of accounting. Right, you account for your expenses on a month-to-month basis. Okay, we call that a budget. Right, so as an individual, you might have a budget, and that deals with money. And if you had to account for your income and your expenses, you're basically doing that process, but for an individual, not for a business. So businesses do the exact same thing. Businesses have to manage their finances. Right, businesses have income, businesses have an expense, and they need to then look at both and determine if the business is going to continue to operate or not. Okay, importance-wise, last at the end, name? Lamise. Okay, Lamise. Why do you think it's important? So, okay. Anything else? Is that it? Okay, that's fine. Right, so definitely things need to balance because debits have to be equal to credits. Okay, that's like the old time age like thing that they always talk about. Okay, balancing books, making sure debits equal credits. Okay, it sounds very boring, but you'll see why we need to look at that. Okay, so to answer these questions, what is accounting? You could have just said it's a language. Okay, so you may or may not be able to speak other languages. Okay, this is a language we're going to learn how to speak because what does this language deal with? What we spoke about earlier, finance. Okay, money. So if you said accounting is a language, you would be right. It's a language for communicating specific information relating to money or finance. That's all it is. Okay, so it's a skill. It's another skill that you guys are covering as part of your course so that you'd be able to deal with different situations in terms of the understanding. Okay, so do we understand what an asset is? Do we understand what a liability is? Do we understand what that language is saying so that we can make a decision? That's the important bit. Okay, the decision making. So the only reason why we need accounting is because somebody needs to make a decision. Right, so accountants provide information. Welcome. Oh, thanks.
It's
Yeah.
a pleasure.
Thank you.
I hope it works.
I probably won't need it now, but maybe later. Okay, thanks.
Perfect. With pleasure. If something happens, then I'll just refer you to Siobhan.
No problem. Thank you, hey. All right, so accounting is just the information. So bookkeepers, accountants, they provide information to managers, and managers make those decisions. Right, so the importance is the decision making. What can we use this in order to help us with? Well, in terms of the process, the first step is always the transaction. Okay, so NB, when looking at any question, past paper, assignment, makes no difference, there are going to be transactions. What is a transaction? It's just almost like an exchange, okay, between a buyer and a seller. So when you have two individuals and they enter into a contract, they'll transact. And if they're transacting, there'll be a buyer and there'll be a seller. Welcome. Okay. Oh, Naja's brother, yes, welcome. Okay, so if we're looking at buying and selling, you've got two separate transactions, and those transactions have to be recorded in the books of the entity, okay, the books of the business. Right, so the reason why we have a debit and a credit is because we actually have two parties to every transaction. Right, every transaction will have a buyer and a seller. So the one individual will have a debit and the other individual will have a credit. Right, and that's how accounting basically works, is it's a record of transactions, and those transactions have two parties. Right, every transaction has to have two sides, and those are the two sides that we would account for when looking at reports, okay, or journals, or ledgers, or anything really. Okay, there's always going to be two sides to every transaction. We know that accounting looks at past information. Okay, so evidence of economic activity, it's historical performance because it's in the past. And from your perspective, you guys need to measure and you need to recognize those transactions in the books of the business. Okay, so for example, if we give money to the business, how is that money viewed, and how do we measure it, and how do we recognize it? Recognize would be the recording. Okay, how do we record it? Okay, so where does it go? Does it go in an asset account? Does it go in a liability account? Which account does it affect? Okay, we spoke about this earlier when we said what is accounting. Accounting is just a way to communicate information to users. That's the key. It's a form of communication. When we talk about money and we're looking at transactions, we're going to need a language that everyone speaks so that we can all understand the same records, okay, the financial information. Right, so who uses financial statements and why? There's many, many, many different users. The two main groups would be internal and external. Those are the two main groups of users. So if I think external, you could use CEO, board of directors, managers, supervisors, people inside the business. External, investors, shareholders, governments. There's a lot of people outside the business that would want to see. Maybe your supplier, okay, even your consumer, maybe your customer. They might want to also look at your statements to see what sort of position you're in. Okay, so the first bit that leads on to those rules that we spoke about that are so important, foundation, is this whole idea of nature of accounting. Okay, so when we talk about the nature of accounting, right, think about nature. So the trees, okay, water, the ocean, okay, the sea, right, those are all like universal, fundamental, basic principles that won't change. Okay, like earth, wind, fire, those elements, right? Okay, so the same thing applies in accounting. You've got fundamentals that will never, ever change. And I call those elements. You'll see them on a later slide. Okay, we call them the elements. So like your earth, wind, and fire, and those type of things, we get accounting elements. And what are the accounting elements referring to? Those basic principles. Right, so it's like the periodic table. If you take anything that's around us now, it's all made up of different atoms, okay, and molecules and all of that. So the same thing happens in accounting. Anything that you deal with, any transaction, can be broken up into its basic principles or elements. Okay, so we're going to practice taking transactions, okay, and we're going to break them up into the elements, because if we can get them to the elements, then it's easier to understand. Okay, and it makes your studying easier as well, because then you just need to study 6 rules instead of 20, 30, 40, 50 rules, depending on how much accounting you do. Okay, so you guys are doing the introduction, the first like module in terms of accounting, so it's mainly basics, but if you go further, then it just gets more complicated in terms of the transactions, but the basics stay the same. The language doesn't change. Okay, so I mean like something as simple as English. Okay, we can use the language to have a conversation with our friend, or we can write a fancy report that we're going to submit to the director. It's the same thing. Okay, it's either more sophisticated or more simple. Right, but the basics stay the same. The words stay the same. Okay, the fundamentals stay the same. You can't change that. Financial statements, that you'll only look at a much later stage in terms of disclosure. And then accounting denomination, obviously we're looking at rands, so everything we need to look at is in rands and cents. Right, types of businesses. The one that you guys are going to focus on, the first one. You're not going to look at partnerships, closed corporations, and CCs. The scope is limited to the sole proprietor. So if I'm looking at this, the accounting, will the accounting be the same for all the businesses? How many of you say yes? Hands up if you say yes. Do you think the accounting will be the same for all the businesses? Okay, 1, 2, right? The rest? No, I guess. So you're saying no? Maybe, or not sure. Okay, if you say yes, you're right. So what won't change? The rules won't change. Okay, the basics won't change. If you said no, you're also correct. Okay, because the disclosure will be different. Okay, disclosure is just presentation. That's all it is. Okay, so if I write a letter, the letter has a specific format. If I disclose information in accounting, it has a specific format. Okay, it's presentation, it's format. That's all it is. Right, so different businesses have different disclosure. Different businesses all use the same rules. Okay, the rules are the most important bit that we need to remember because that's universal. Okay, it doesn't matter what I'm dealing with. Any of these items here would all be using the same set of rules. Are there separate legal entities? Well, the first one, no, not separate. Okay, what does that mean? You guys covered law, you probably have a very good understanding of what that is, right? If a business is a separate legal entity, does the business operate in its own name? Yes. Okay, so if you transact with a company, okay, you enter into contract with the company, not with the CEO, or not with the director, or not with the manager. Okay, so separate legal entity. If you transact with a sole proprietor, are you dealing with the sole proprietor? Yes, you're dealing with the sole proprietor. So sole proprietors are not separate. Partnerships also not separate. So a partnership, that could be like a married couple, husband and wife. Okay, both are in a marriage, in a marriage, so if you're dealing with the one, you're dealing with the other. If you enter into contracts, it wouldn't be separate. Close corporations, are they separate? Yes. Okay, they're separate because they continue forever. Okay, CCs, you can't register a new CC because the legislation changed a few years back, but the existing ones continue, but they are separate. Companies, yes, separate legal entity, they're separate. Okay, that's just from a disclosure point of view. You do get other forms of ownership. You get non-profits, NGOs, NPOs, and those fall outside the scope. You're not really going to see any examples looking at that. Okay, earlier I asked you guys about users. This is just a general summary, just looking at different users. Investors would be looking at the information from a decision-making point of view. Are we going to invest? Yes or no? How do they know whether the company is in a good or bad position? The financial statements are going to tell them that. Employees, same thing. Employees are going to want to know how well the company is doing. Right, you'll have internal records, you'll have internal reports, and you'll also have a set of financial statements. Lenders, so the banks. Before the banks lend money to companies, what are they going to want to know? How much assets and liabilities does the business have? Right, if they've got too much liabilities and not enough assets, they're probably not going to get the loan. Suppliers, customers, government, there's a lot. All of them will be using the financial information to make some sort of decision. Okay, that's ultimately why we're completing this course, is because at some point in time there will be decisions maybe that have to be based on accounting. Okay, maybe let's think about like fraud. Maybe you pick up fraud within a company. The only way you can prove that is by looking at the records, okay, the financial records. Right, so you'll have to then investigate further and make a decision, and that will probably affect that judgment. Okay, so does that person get convicted of that crime? Well, if the financial information points to that, then yes, they would. If not, then they wouldn't. We spoke about this earlier, internal and external. You guys are looking at this one, the financial accounting. Why? Because it's the reporting. It's not the detail in terms of management. Management accounting, more detailed. Okay, so you get different types of accountants. You get accountants that are management accountants, you get financial accountants. The financial accountants focus more on the reporting. So they look at summarizing information rather than detail. Okay, so for example, would the investor want to know exactly how much you're paying every employee in the company? No, the investor would just want to know what is the payroll. Okay, what is the total salaries and wages exactly? Okay, but if you're the manager of your department, would the manager of the department want to know how much everybody is getting paid? Of course, right, because that will affect is just to remember that information needs to be fairly presented. Okay, fairly presented meaning those transactions have to be accurate and they need to be honest. Okay, we know what happened to Steinoff. Okay, well, what's happening to them? Okay, and what's happened to some of the other more, let's say, publicly known culprits? Okay, Lehman Brothers, maybe. That's about 10 years ago, actually, 2008. It's a long time ago. Okay, financial crisis. Right. So obviously, companies do certain things. Sometimes they don't always follow the rules, and they get themselves into trouble. Okay, best example is the Steinoff's debacle that's happening currently. They're going because people aren't saying that they fairly represented the information. Okay, they misled their shareholders, right, and that's a problem. Okay, if you're not representing the transactions correctly, there's a problem. Right, and that's partly why this course is also so valuable. It's because you can interpret the difference between two types of transactions. Okay, so buying an asset versus buying something that's an expense. Okay, buying an expense versus, or paying for an expense or paying for an asset, those are two different things. Right, the one has a good consequence, the one has a more negative consequence. Right, if you buy an asset, you've got something. Okay, if you're spending money on an expense, you don't. Okay, it's temporary, it's short term. Okay, so here's the note about the rules. We mentioned it earlier, recognition is important, and so is the measurement. This is from an application point of view. So when you apply your knowledge, there's two things that you need to look at. Obviously the rand amount, so the rands and the cents, that's the measurement. Okay, so measuring things like depreciation, measuring interest, measuring whatever the scenario is covering. Recognition is, well, do you know what you're dealing with? Okay, recognition, do you know that that's an expense, or do you know that's an asset? Like, what is it? Okay, that's the recognition. Do you know what something is? And then measuring it is something separate. Okay, but both go hand in hand because you need both to answer the question. Okay, to apply the theory. Policies aren't so important. Disclosure, yes, but for later when we look at the, I didn't write it in. Let's write it in. Financial statements. Okay, I have seen that they've changed your module slightly. Your module is actually a bit shorter than what it was before. Before the FAC1503 rather, module was a lot longer. You had 16 study units in total. Here they've broken it down and they've grouped things together. Okay, so it looks a little bit less, but all the basics still stay the same. Okay, International Financial Reporting Standards, that's the rules. Sometimes they talk about GAAP, that's just history. So in South Africa, once upon a time, we had our own set of rules. Obviously, having our own set of rules isn't competitive because now we're doing our own thing, we're not in line with the rest of the world. Okay, so to make South Africa more competitive, around the 2000, somewhere around there, okay, there was a move towards IFRS to bring our standards in line with the rest of the world. Okay, and that was positive. Why? Because that creates a system whereby all South African companies are following international standards, and that makes a big difference. Because now we can be working in any country in the world, and we're all speaking the same language. Okay, an asset means the same to everybody that uses the same set of rules. Okay, and that's the power of IFRS. Okay, IFRS is international. You also get US, GAAP, okay, generally accepted accounting practices, and that's just the US standard. So the world has two ways of accounting for transactions. The US method of accounting for transactions, and then the International Financial Reporting Standards. Okay, they're both very similar, but there are some discrepancies, okay, between the two. IFRS is obviously better because more countries use it, right? But America is a very important country, so it is still something that you do see in the real world. Okay. Don't worry too much about theory. I doubt they will test too much theory in your actual exam. Okay, they'll test more the practical. Right, the theory is great just to have a background understanding of why we do accounting. So I've just given you the ones that stand out. If you go read the textbook, they talk a lot about the objectives and the characteristics in that chapter, that volume 1 textbook that I mentioned. Okay, so when looking at financial statements, going concern just means the business will continue forever and ever without closing its doors. If the business is going to close its doors, can we show the business as though it's not going to go bankrupt? No, that will be misleading. Okay, so a going concern means the business will continue, and if it is, we have to present that information accordingly. But if we know that this business is going to go bankrupt, then we cannot show the financial statements according to a going concern. Okay, because that's misleading to the users. Because remember, the purpose of this is for users to use the information to make a decision. Relevance and materiality looks at transactions. Some transactions are so immaterial. Immaterial meaning not significant. Well, yeah, that's a whole other debate, but materiality is just looking at that. Okay, is a transaction material? So for example, if you guys buy stationery, are you going to keep record of it? No, because you're not going to mind losing a pen or a pencil. Okay, but now if a stationery business had to buy stationery, would they have to account for it? Yes. Okay, so it's material for a stationery business, it's immaterial for an individual. Okay, so it also works with value as well. Right, so buying a pen or pencil, in terms of the bigger scheme of things, doesn't have a very significant value, so generally immaterial. Right, faithful representation, obviously things need to be honest and true and accurate. Comparable, we need to compare year on year. We need to compare different accounts. Verifiability is looking at the audit. Sometimes you might have heard of the word audit. Okay, companies get audited, and an auditor is just basically a checker. It's a fancy checker, and they check that information is accurate, okay, reliable, that the transactions have been captured correctly. So verifiability is looking at, do you have all the invoices to prove the transactions? Okay. Timeliness, that's looking at information and when is it going to be presented. Right, so when should you capture transactions? The day that they occur. Okay, when transactions occur, you have to record them. Understandability is looking at this bit, which is the elements. And this is the most important thing from this first set of notes is the rules. Okay, we need the rules. Okay, so I've given you the accounts here in terms of their names. Okay, assets, liabilities, income, expenses. And then equity is a special one. Okay, because it's grouped or broken up into two, capital and drawings. Right, there are only 6 accounting rules. Right, so when looking at financial position, we need to look at 2 of the 6. Okay, you'll see it gets split into the different categories. Okay, so financial position. Let's think about it logically. Okay, if someone asked you, what is your financial position? What are you going to be thinking about? Do you have enough money or not? Okay, possibly. What else? A balance of what? On what? Okay, yeah, so if you're looking at the accounting equation, yes, that's part of this discussion because we're looking at financial position. Right, so let me talk about 2 individuals. Individual A, okay? 1 million rand worth of assets. 2 million rand worth of liabilities. Would you want to be person A? Probably not. Why? Because their assets are less than their liabilities. The liabilities exceed the assets. Do you agree? All right, versus person B, 1 million rand worth of assets and 500,000 rand worth of liabilities. Okay, so this person is in a better position than that person, right? Okay, so both individuals have 1 million rand worth of assets, but they're not all in the same position. Why? Because the one owes more and the one owes less. Okay, so financial position is actually a very easy concept to understand because just think about that. think about your assets and your liabilities. The difference is going to tell you if you're in a good or bad position. Right, so people that are in bad positions are people that are in debt, that have more liabilities than assets. People that are in good positions have more assets compared to their liabilities. So it's a very basic, easy concept to interpret. The accounting equation talks to that principle. Okay, financial position. Why? Because the accounting equation is A equals OE plus L. I can rearrange this equation and I can make OE the subject. A minus L. Right, that's the equation for owner's equity. So what is this looking at? It's looking at the net worth or the financial position. That's what it's looking at. Oh, don't end. Let's go back. Okay, financial position. Owner's equity equals A minus L. Okay, so if you take your assets minus your liability, see what you've got left. If you've got something left, meaning your assets are greater, good financial position. Okay, if liabilities are greater than assets, bad financial position. Okay, no one wants more liabilities than assets. Right, so what is the definition? Well, when looking at exercises that come up, your role, your job is to interpret those transactions. Okay, so when they're talking about furniture, I'm sure you all agree that furniture is an asset. Okay, but now why is furniture an asset? Here's why. There's a very specific definition. Okay, remember, recognition is part of the process to record transactions. So if you don't know that furniture is an asset, there's a problem. Okay, you're not going to be able to record the transaction. If you know furniture is an asset, then it's easy to account for the transaction because you know what you're dealing with. Okay, so step number one is the recognition. Right, the definitions, what helps you recognize what something is. It is what it is. Okay, so when I look at a table, I know that's a table and not a chair. Why? Because it's structured a certain way. Okay, there's a piece of wood on the top, and it has 4 legs, right? And it's of a certain size that I can use it to write on, okay, as a table. Right, a chair, the form looks very different. Okay, we can clearly see the difference between a chair and a table, right? Because they both have very specific characteristics. Right, so how do I know what an asset is and how do I know what a liability is? The same thing. This is what you'd have to study though. Okay, so you would have to study these basics because these are the 6 basic rules. And the 6 rules never change. This is number 1, the assets. Okay, what are we dealing with? Financial position. So an asset is defined as a resource. The key word here is the word resource. If you're looking at words to remember, you just have to remember resource and future benefit. That's all. Okay, so why is a table classified as an asset and not a liability? Okay, because the table gives us future benefit. Okay, we can come here next week and this table will still be here. We can still use it. There will be future benefits. Okay, if I switch on the light, that electricity is consumed today. Am I going to have that electricity in the future? No. Okay, I put on the light, I'm using electricity. Okay, if I open the tap, the water flows out. Okay, I'm not going to have that water in the future. The water's gone after I've opened the tap. Okay, if you've used that resource, it's gone. Okay, so the reason why an asset is because there's future benefits. Right, so land and buildings, do you think that's an asset? Of course it's an asset. Right, there's future benefits. Do you think a vehicle's an asset? Okay, be careful. A vehicle is a vehicle. Alright, so a vehicle is a vehicle. We'll discuss that later when we look at double entries. Okay, but I want to mention it now because you mentioned it, a vehicle. Okay, can a vehicle be an asset and a liability? The answer is no. Okay. All accounts asset or you have a liability, that's it. Okay, there's no in between. It's either this or that. Okay, so if I'm looking at vehicles, vehicles is something very specific. Okay, vehicles will always be considered an asset, always. But if you bought your vehicle using a loan, then the loan is the liability. Okay, a loan will always be a liability. See, now you're bringing the double entry, so you're jumping the gun a little bit. Okay, because a vehicle is a vehicle is a vehicle. It is what it is. Okay, there's no changing a vehicle. Okay, a vehicle is an asset, but this asset can be bought using a liability. Okay, that asset can be bought using another asset. We call it cash. Okay, so if I use cash to buy a vehicle, then I've got cash and the vehicle. If I use a loan to buy the vehicle, then I've got the loan and the vehicle. Alright, but it is what it is. Okay, there is no this can be this or that. Black or white. Okay, it's either asset or liability. Okay, it's male or female. That's it. Okay, there's no in between. Okay, so when looking at vehicles, what is vehicles? An asset. Okay, why? Because it meets the definition of a resource. Okay, that vehicle is there and it will be there tomorrow and the next day and the next day, and we can come back and use it in the future. Okay, let's talk about the loan that you mentioned. Let's just change the color quick to red. Okay, so is a loan a resource? No. Okay, a loan is a liability. So here's the definition. So what makes a liability a liability? It's this keyword. Okay, you can read the whole definition. Present obligation giving rise to future outflow of benefits. Okay, the key word that I would highlight is the word obligation. That's what differentiates an asset from a liability. Okay, so is there an obligation if you have a loan? Yes, you have to pay it back. Right, is there an obligation when I have a mortgage? Yes, you have to pay it back. Okay, if I buy goods on credit, must I pay the supplier? Yes, there's an obligation to pay the creditor. Okay, so those things are those things. Okay, we can't change what something is. A loan is a loan. A liability has that specific definition. Okay, can I use a loan to buy an asset? Yes, but then we're bringing the two things together, and now we're looking at a transaction. Okay, right now we're just focusing on what things are. Okay, what is this, what is that? What is this, what is that? That's all. Okay, and it's as straightforward as that. Step number one will always be to identify the elements. Okay, when I say element, I'm referring to this, asset or liability. Okay, these are the first two elements. There are more. This is just a note about disclosure. You'll see they talk about short-term and long-term assets and liabilities. So the word non-current or fixed relates to a long-term asset. Okay, it's just a fancy word to describe something that's longer term. Current, short term. Yes, less than 12 months. Long term, greater than 12 months. Right, so a car, non-current or current? Non-current. Okay, the car would last longer than 12 months. Okay, inventory, which is stock. If I'm buying stock to sell, it would be current because hopefully you're going to be selling that stock within 12 months. Okay. Liabilities, the same thing applies. You get long-term liabilities, you get short-term liabilities. Except you don't call them fixed liabilities, it's just non-current. Non-current or current, that's it. Again, long-term or short-term. Greater than 12 months, less than 12 months. So maybe if you want an example, a mortgage would be long-term. A credit card would be short-term. Okay. Yeah, hopefully. Right, I've given you this, you've seen it already, the accounting equation. Okay, most textbooks start with the basic accounting equation, and the reason for that is analysis of transactions. And that's the foundation, and that's the start. If you don't know what's happening in a transaction, you're not going to be able to do more accounting. Okay, the first step will always be to analyze and to interpret the transaction. Okay, so what steps do we need to do that? Step number 1, elements. Okay, when I say element, asset, liability, income, expense, that type of thing. Okay, that's the first step. Right, we'll see more steps later. Right, but that's what we need to do. So when you analyze a transaction, just remember to always identify the elements. Do you have an asset? Do you have a liability? Do you have, like, what do you have? Okay, if you know what you have, then you know how to treat it. Okay, you'll know what to do. Okay, because the rules are very, very specific. Right, accountants talk about a double entry, and the double entry refers to a debit and a credit. Okay, what does a debit and credit mean? Anyone know? Why do they use the words debit and credit? Do these things have meaning? Yes. Any idea what that could mean? One's plus, one's minus? Not always. Exactly. Yeah, so this refers to the left hand side, and this refers to the right hand side of an account. Right, so we talk about different accounts. Okay, an account could be furniture. An account could be water and electricity. An account could be salaries and wages. It's just something that you need to account for. Okay, vehicles will be an account. Okay, anything that you have in accounting will be an account. Okay, because you're accounting for it. Right, so if I've got land and buildings, it's its own account. Okay, that account will have a left-hand side and a right-hand side. Okay, instead of talking about the lefts and the rights, they talk about the debits and the credits. Okay, because how silly would accountants sound if they talked about lefts and rights? Okay, left this, right this, and it's like directing traffic or something. Okay, it's not like what you want to use. Okay, when you're looking at business. Okay, so in business, when we talk about assets and liabilities, we want to talk about the debit or the credit, not the left or the right. Okay, that's the only thing. So forget about anything else that you knew. If you didn't know this, great, you know it now. Okay, but it's not plus and minus, it's not minus or plus, it's just left and right. Okay, the left could be a plus, the left could be a minus. Right, but now that's looking at a specific rule. Okay, and those rules we haven't looked at yet. Okay, when looking at financial position, this is looking at this disclosure. The key word there is disclosure, disclosing. Disclosing our assets and our liabilities. Earlier we said assets and liabilities tell you what position you're in. If you've got more assets than liabilities, you're in a good position. Okay, it's quite easy to remember. Right, so statement of financial position. That's disclosure. That'll only come up much later when you actually need to draw up statements. This is referring to those two things, assets and liabilities. Right, are we not going to look at the equity? No, we will, but we will summarize it. So equity is part of it because owner's equity equals assets minus liabilities, or assets equal owner's equity plus liabilities. Okay, there's that accounting equation. Okay, the equation is just the equation. It is what it is. Okay, it's just something that you can use. Okay, the equation won't change. Right, now we've got two more. You've got income and you've got expenses. Okay, so remember how many elements do we have in total? 6. Okay, we saw them on one of the slides. You'll see them at the end all like put together, and that's what you need to study. Okay, right now we just need to identify what something is. Okay, so if I talk about land and buildings, we know it's an asset because it's a resource. If we talk about a loan, we know it's a liability because it's an obligation. Right, so now if I talk about income, what is income? Well, it has a very specific definition. Okay, any income that you derive, it doesn't matter from where. It could be from royalty income. It could be from investment income, interest income, salary income, rent income, wages income. Okay, income is income. What is income? An increase in benefits. Right, you're getting something more than what you had previously. Okay, and income is income, it's now. Okay, you either get something more today or you don't. Right, there's no future benefit here. Okay, it's now. Okay, do I get something more or don't I? If I get something more, it's income. If you don't, it's not. Okay, how do we recognize what an expense is? It's the opposite. Okay, so the key word there is that decrease in benefits. Okay, you lose something today. Okay, you lose something. Okay, so for example, the pens and the pencils that you guys are using. Okay, as soon as you put that to paper and you write with it, that ink is gone. Okay, you're not going to get that ink back. Right, it's a decrease in economic benefit. Okay, I switch on the lights, I'm not going to get this electricity back again. Okay, we use it, it's gone. Okay, the water, open the tap, it's gone. Okay, so with expenses, it's a decrease in benefits. I've put a note in brackets here. Generally arising from assets, generally arising from liabilities. Okay, and that's why you want more assets, because assets should generate income. Right, if you buy a second property, you can rent it out. Okay, if you buy a second vehicle, you can rent it out, or you can transport people with it. If you buy a machine, that machine can produce products that you can sell. Okay, expenses generally create liabilities. Other way around, sorry. Liabilities generally create expenses. Right, so when you take out a loan, you have to pay interest. Right, you're paying something. Okay, you're losing something, do you agree? Okay, so the loan is what? The liability. The interest on the loan is the expense, because it's a decrease in benefit the day they charge you the interest. Okay. Other expenses. Stationery, wages, water and lights, rent expense. There's a lot. You'll see many different bank charges, many different expenses. Okay. Right, so why do companies operate, guys? To make money, but better word for that when looking at accounting is? Okay, that's net worth. That's financial position. Okay, so if we wanted to improve the financial position of the business, we would want to look at buying more assets and paying off the liabilities. If we're looking at operating, so operating is the day-to-day. Okay, what do you want to do day-to-day? You want to generate income. Okay, and generating income will probably come at an expense. Okay, yes, and that's called a profit. Good. Okay, so did I write it in? No, let's write it in. Profit equals profit slash loss. It could be either or. Income minus expenses. I minus E. Ideally, you want income to be more than the expenses. That's first prize. Okay, because if you land up with more income, you'll land up with a profit, not a loss. Okay, but the difference is the profit or a loss. Right, so companies operate. When we're looking at operating, we're looking at day-to-day. So that would be like sales. Day-to-day running of the business. Okay, what is that looking at? It's looking at your performance, not your position. There's a very, very important difference here. Okay, so when I look at position is today. Okay, what position are you in today? Okay, do you agree tomorrow it's a different day, the position would have changed? Okay, maybe there's a little bit more interest on your loan. Okay, or maybe you bought an asset today, so you've got more assets. Or you buy an asset. Okay, I'm gonna have to plug this in quick. Let's see if this works. Can you switch on the I'm gonna switch this off, and then you can just press that back. Okay, so day-to-day running of the business is looking at income and expenses. Okay, the concept we were talking about here was the word performance. Okay, so let's talk about a performance. If I think about, is that coming on? Or is it? It is. Okay, if I think about the performance, let's talk about soccer. We had the World Cup 2018. Okay, France won it. Okay, so if we're looking at performance, do you measure performance at the beginning of the game, during the game, or at the end? At the end. Okay, why?
What are the net results?
Exactly. You're looking at all the tackles and the shots at goal and the goals, and then you determine who wins. Do you agree? Okay, so performance is looking at a period of time. Okay, so for example, if you make a sale today, good or bad? Good, if you make a sale today. But if you don't make a sale for the rest of the year, have you performed? No, you haven't.
Sorry for the interruption. They're joining you, but they're late.
Okay, no problem.
Okay.
Just get some notes from Gemma first.
Okay.
Okay.
All right. Thank you.
Right. Okay, so if I'm focusing on performance, time is very important. Right, so you determine the winner of that match in the 90 minutes. Okay. If someone scores a goal in the first 10 minutes, that's good, but they can still lose the match. Right, so performance is looking at the entire year. So when focusing on performance or profit, we're looking at the entire year. And how long is the financial year? 12 months. That's the financial year. So businesses look at the entire year. What did they do over the 12 months? Not what did they do today, or what did they do last week or this week. It's what happened during the entire year. Okay, what was the total income for the year, and what was the total expenses for the year? If the one exceeds the other, we'll have a profit. Okay, if income's bigger, we'll have a loss if expenses are bigger. Okay, but that talks to what? The performance. Okay, the business is either going to do well, they're going to perform, or the business is not going to perform. Okay, the performance is the whole match. It's the whole year. It's everything. You don't just look at one point in time. Okay, you can't say, so for example, today you do a past paper, you've performed. Okay, but if you don't do a past paper every day leading up into the exam, you haven't performed. Okay, so performance, or like music, a concert. Okay, so we have Beyonce and Jay-Z coming to South Africa. That was like big news. And we have Ed Sheeran next year, I think it is. So these are like big concerts. Right, so now, are those concerts going to be a success? We won't know. Okay, unless we ask someone who's actually attended it and stayed through the whole thing, they'll tell you whether that was a good performance or not. Okay, maybe it's a great opening and it's all great and everything, and then it maybe dies down, or it's not as good as you hoped it to be. Okay, and that kind of happens, maybe, sometimes. But the point is, performance has an element of time. That's important. Okay, so you're looking at 12 months, you're not looking at a point in time. Right, who's entitled to the profit? That's an easy one to answer. Yes, the owner. Okay, owners are entitled to the profit. Okay, so remember earlier we spoke about equity being broken up into two, capital and drawings. All right? Does profit affect the owner? Would it? So you're the owner of a business. Would the profit affect you? Of course it will. Right. If you make a profit, will you be entitled to more? Yes, you would. Right, and that's why you've got these 2 points here at the bottom. Okay, so point number 1 says, owner's equity will increase with more income. If a business makes more income, they'll land up with a profit. Do you agree? More income, more profit. More profit, more owner's equity. All right, so there's a direct relationship there. If I increase my income, I'm going to increase my profit, I'm going to increase my equity in the business. What happens to expenses though? Do you want more expenses? Probably not. Why? Because if I have more expenses, I'm going to have less profit and I'll be entitled to less equity. Okay, good. All right, so performance. We need to look at the company's performance. We need to look at the company's management of their income and their expenses. Okay, if we don't know how they're managing income and expenses, we won't know whether they're performing or not. Okay, performance is dependent on whether they can manage their income and their expenses. Right, so now you know the other two. So now we know 4. Assets, liabilities, income, expenses. Where am I going to disclose this? See, this will only be covered much later when you look at like the financial statements, the actual disclosure. Right now I'm just giving it to you purely as just an example. Just have a look at this. The page references are for the textbook, that volume 1 relating to this. Sales, cost of sales. What is that giving us? Gross profit. Why? Sales is an income. The cost of the sale is an expense. I will have other income, maybe rent income, and I will have other expenses like water and electricity and other. Okay, if the business still lands up with the profit, their income is more than their expenses. Okay, that's just format, that's just layout. That's how we're going to present information if we're looking at financial performance. And what is that going to be looking at? The whole year, not part of the year, not 1 month or 1 week or 1 day. It's the whole year because we're reporting on the performance for the year. Okay, the entire year. Okay, the whole year. Financial performance. Okay, the last 2, and then we've covered all the rules. Capital and drawings. Capital has a very specific definition. Money or assets contributed to the business by who? The owner. That's the key word here. Owners. See, owners or shareholders consider how much is owed to them because they're entitled to the profit. Right, so we can maybe write down by the owner, just to add that detail. Okay, all of this looks at the owner. Okay, the owner giving money to the business. The owner giving an asset to the business. Drawings is the opposite. Drawings, money or assets taken from the business for personal use, again by the owner. All of this relates to the owner. It's owner's equity. Right, so there's a formula here at the bottom. Now you've got 2. Earlier we saw an equation for owner's equity, and the equation was OE equals A minus L. Okay, that's one equation for owner's equity. There is another. Right, if I'm wanting to determine how much the owner is entitled to, I need to know how much did the owner give, how much did the owner take, and did the business make a profit or a loss by looking at the income and the expenses. Okay, so profit and loss is income and expenses. So owner's equity comprises of how many different accounts? 4. Okay, owner's equity is affected by capital and income. Let's look at those 2 together. Does capital and income affect owner's equity positively? Yes. If I give the business more, do I have more in the business? Yes. Right. If the business makes more income, do I have more in the business? Yes. Okay, so that affects the owner's equity positively. What happens if I have drawings and expenses? Those are the other 2. It decreases it, correct. Okay, so that also affects owner's equity but negatively. Right, so if I draw more from my business, do I have more in the business or less? Less. Okay, you have less equity. If I have more expenses, will I have more or less equity? Exactly. Okay. Right, so those are the 4 accounts that deal with owner's equity. Both relate to performance. And this is the page that you need to study. That's everything. Okay, so if you're looking at one page that you need to highlight, circle, underline, asterisk, it's page 24. It's this one. Okay, this page is everything when it comes to the elements and the rules. Right, I'm going to show you how to use these elements and rules today. Okay, we'll just get into the basics. Okay, how to use them. Later on, you'll see they're used everywhere. Okay, but they're just used differently. Okay, in terms of the pluses and the minuses. Right, so financial position and performance, both are covered here by these rules because we've got all 6 of them. Assets and liabilities, what's the keyword for assets? Correct. Okay, so if I asked you, what is machinery? It's an asset. Is machinery a resource? Yes, you control it, you use it. Is a computer a resource? Yes, it's also an asset. Is equipment a resource? Yes, it's also an asset. Okay, so how do you know if something is an asset? Ask yourself if it's a resource or not. How do I know if something is a liability? Do you remember the keyword? Correct. Obligation. Okay, so I'm just adding to this because we've covered it. You can go back and you can look at the definition. Okay, the key word is obligation. If I have an obligation, I have a liability. Right, so if you loan money from the bank, is the loan from the bank a liability? Yes, it is. There's an obligation to pay it back. How do I know what income is? Increase in benefit. Okay, so if I get income from interest income, yes, interest received. Right, so they're actually really easy to identify. The only one that you probably will have trouble identifying is maybe sales. Is sales income? Yes. Is services rendered income? Yes. Okay, if you render a service or you render or you give a product, it's still income. It's an increase in benefits. Right, expenses, there's lots. Is insurance an expense? Yes. Decrease. It doesn't depend. It's never anything else. Okay, yeah, insurance is insurance, an asset is an asset is an asset. Okay, so something is what it is. Okay, insurance for an insurance company could be something different. Okay, but that could maybe be it depends. All right, but insurance for a business would be an expense, unless they're an insurer and they're selling insurance. Okay, but we're not going to look at things like that. Okay, you guys are looking at law practitioners, businesses that operate generally as a sole proprietor, maybe as a partnership. Okay, so decrease in benefits. Okay, those are expenses. Capital and drawings. Capital is capital, drawings is drawings. Okay, the reason why I highlighted the C and the D is because the rules are so easy to remember if you just remember which side you're looking at. Okay, so remember the debit is the left. The credit is the right, and that's it. It has no other meaning. Okay, that is the meaning. Okay, so if I look at capital, what letter does capital start with? A C. What letter does credit start with? A C. So C for capital, C for credit. The plus is on the C. Okay, so always remember where the pluses are. Pluses are more important. Positive is better than negative. Okay, so we need to know where the positive symbols are. And for capital, that's easy. C for capital, C for credit, C for the plus. Okay, D for drawings, D for debit. So the debit is where the plus is. Okay, then you have 4 other rules that you need to know. Okay, and these are the others. Assets have a plus on the debit side, okay, and a minus on the credit side. Liabilities have a plus on the credit side and a minus on the debit side. Income, plus on the credit side, expense plus on the debit side. Okay, and these are just rules that you need to know. Okay, it's just something that you have to study and learn. Why? It's the basic principles. Okay, it's the basics. It's everything. Okay, but then we just need to practice applying it. Right, so something that I've seen students use to remember these rules are as follows. I'm going to just write it down separately so you can see it. Okay, rather than having to write it down using the mouse. FAC1503. Okay, so something that I've seen students use to help them remember the rules when they've never seen these things before. Okay, they remember an acronym. DEDLIC. Okay, it's just an acronym. You can maybe create your own if you want to, but I've seen students use this one, and it works. Okay, so they write down the acronym, DEDLIC. Okay, the first word has meaning. Okay, the yellow, okay, it's not too bad on this projector. Right, so it's debit, which is the plus, expenses, assets, and drawings. Okay, drawings, assets, expense. Okay, so there's it. So that's what you write down. Okay, you write down DEDLIC. Okay, it's debit plus expenses, assets, and drawings. Right, then the LIC is representing the liability, the income, the capital, and those are all credited. Okay, let's make those a capital letter, CRDR plus. Okay, and that's what they use to remember the rules. Okay, because why? That gives you this. That gives you those 6 accounts. Okay, so if you can remember these, great. If you can't, just write down the acronym. Okay, what does the acronym represent? Ooh, go back. It represents this. Debit, which is a plus. Remember, positivity is better than negativity. So, debit plus expenses, assets, and drawings have a plus on that side. Okay, what is the debit side? It's the left-hand side. That's it. There is no other meaning for it. Liabilities, income, and capital all have pluses on the credit side. Okay, if you look at them, the liability, the capital, and the income all had a plus on the credit side. Okay, so it doesn't matter. No one's ever going to ask you. Eunice's not going to ask you how did you remember the rules. Okay, they want you to use the rules. Okay, so we need the rules. If we don't know the rules, then we're not going to be able to apply them. Okay, so please remember to study this page. This page is everything. Right, if there's one page that you study from this week, it's this page. Okay, the rest is just application. This is the basics. This is like the first thing that you need to learn. Okay, there's not much that you need to learn. It's application. That's important. Okay, so this, I'm going to say, you have to learn. Okay, there's no getting around that, unfortunately. Right, there are other ways of getting around studying lots and lots of scenarios. Okay, that's application. Okay, that's understanding, that's interpreting and applying this. Okay. All right, so now we have a homework activity. This is something that I want you guys to do for next week. Okay, obviously you guys are going to be going through the study guide, you're going to be going through the textbook, you're going to be looking and finding these different accounts. Okay, we can already write down some that we've spoken about today. Okay, so I'm just going to write down a few just to get you started. Okay, assets, I said land and buildings earlier. We can write that one in. I spoke about vehicles. We can write that one in. Equipment, we can write that. Machinery, we can put that in. Okay, there are so many different assets. There are more. Those aren't the only ones. As you go through the material, you can add to the list. Okay, if you guys can think of any others, add it. Let's see what you guys come up with. Okay, you want to do it now? It's fine. Cash. Right, there are others. Okay, we'll see more as we go through the course. Liabilities, loan, mortgage. Okay, those are two that we spoke about today. Okay, creditors, that's a good one. Or trade payables, another word for it, trade payables. Okay, income, we spoke about sales, we spoke about services rendered. Interest earned, or interest received, or interest income. It just depends how they give it to you, okay, in the question. All right, expenses, water and electricity. Insurance, wages. Okay, be careful with that one. Memberships. Okay, a subscription to a professional body would be seen as an expense, fine. Okay, so membership fees. Okay, but membership fees for that law society or that law thing would be income. See, it's different. Okay, because that's income that they earn. For us, it's what we pay. All right, so membership fees payable or paid. Let's use that word, paid. Payable is bad because payable means there's an obligation. See? See how you can change something. Okay, so membership fees paid would be an expense. Let me write this one down. Membership fees payable means it's a liability. See, you change one word, you change what something is. Okay, it's possible, right? But it still is what it is. So this isn't anything other than an expense. Okay, it'll never be anything other than an expense because membership fees that we pay is an expense. Even the law society would probably have to pay someone for belonging to something, okay, for some association. Okay, so yes, they might be asking the law practitioners to pay them a fee, then they would have membership fee income or membership fees received. Okay, if that's the law society, and then the membership fee that they pay to belong to some other society would be something that they would have to expense. Okay, do you have a question? If they own shares in another company, then it would be an asset because that would be seen as an investment. Then that would be income because that's the benefit that you get from the investment. Okay, good. See, that's the definitions. You're applying it. That's good. Okay, so investment in company A would be seen as an asset because those would be the resource, the shares. Okay, the shares will pay a dividend. Then you can even add that here. Dividend income or dividend received or dividend earned. There could be different ways of describing it. Okay, but the point is, it's a benefit that you get. Right, and there's a lot. I mean, this list will get bigger and bigger and bigger and bigger the more accounting you cover. Right, so the list will only be so big in this module. Okay, in the next module or in the next module, whenever you see accounting again, the list will get bigger. Okay, purely because you cover more accounts. Okay, different accounts that we need to account for. Makes sense? Okay. Right, and that's the first study unit. That's the basics. Those are the basic principles, the key concepts that we need to look at. Okay. All right, so I'm going to quickly go to the textbook now. Okay, we've covered that. I'm going to close this. Okay, so let's go back and let's look at Learning Unit 1. They spoke about the nature and function of accounting. Right, so if you look at what they've given you here. Okay, here's the introduction, well, the contents. You've got what is accounting? Do we know what accounting is? Yes, let's quickly summarize what we just covered. What is accounting? Language. Perfect. Okay, language for communicating money, finance, transactions, business. Okay, so when looking at accounting, the definition is just a way to account for transactions so that we can interpret those transactions correctly because we need to make a decision. Right, so it's simple, it's just the language. That's all it is. Right, nature of accounting, we'll see what they've got there. Forms of ownership, we spoke about that. Users, they've covered that in this first chapter as well. Fields of accounting, you get two, management and financial. Built-in control measures, internal control procedure, that's looking at control, looking at decision making. Okay, we'll look at some theory there. And then the financial framework. The framework is looking at those rules. Okay, this is where you'll see assets, liabilities, income, expenses, capital, and drawings. Alright, so I'm not going to spend too much time reading stuff here, but I just want to show you some of the more important things. Okay, fields of accounting, management and financial, that's fine. The controls, there's a few things here I want to highlight because this you'll probably see later. Source documents, the bank account, the trial balance, the reconciliation. Okay, these are some words that cover different topics that come up later. Right, source documents. What do you think a source document is? Yes, that's an example of a source document. Good. Okay, so a source document is just proof. Okay, so must the business keep their source documents? Of course, because if the business pays someone and they don't get a source document, what is the manager going to say? Did you pay that person? And what are you going to say? Yes, I did. Then what are they going to say? Can you prove it? What are they going to say? No, I don't have a source document. And then, problem. Okay, so you don't ever want a scenario where you can't prove what you're doing. Right, so if a business is running a business, the business needs to keep proof. And the proof is called the source document. Okay, that's what the auditors actually look at. Okay, an audit. Right, so we spoke about an audit. An audit is the process of checking that those transactions are legit and those transactions actually took place. Right, and the only way we can do that is by checking the source documents. Okay, and that's where they get involved in quite a bit. Okay, was the invoice authorized? Was the invoice paid? Those type of things. Okay. Right, a bank account. Remember, an account is an account is an account. What type of element is bank? When I talk about element, I'm referring to one of these six. Okay, so asset, why? Okay, there's the answer. Okay, forget about positive or negative balances. Don't worry about that. That comes later. Okay, I just want to know what it is. Okay, so when you see the word, so when you read a question and they say, the business received money from a customer, deposited into the bank. Okay, you see the word bank and you think, ooh, assets. Why? It's a resource. Okay, that's it. It's as simple as that. So the key is picking up on keywords, because you won't know what the element is if you don't know what the keywords are. Right, so the keyword there was bank. Do you know what bank is? Yes. Bank is an asset. An asset is a resource. Right, then the asset will have a plus on which side? The debit side and a minus on the credit side. Okay, and this is what we use later when we interpret a transaction where there are two different sides. Okay, because your bank can go up and your bank can go down. Right, it can be affected either or. Okay, we receive money, bank is going to go up. If I pay money, bank is going to go down. Receiving money is very different to paying money. There are two separate transactions. Okay, you can't receive and pay money. Okay, you're either receiving money or you're paying money. It's one or the other. Right, so it's a receipt or a payment. Okay. Trial balance. What do you think this is? Well, later on we'll see trial balances. A trial balance is just a list of accounts. That's all it is. Okay, so we've got so many different accounts. You guys started writing a few down. Water and electricity, vehicles, land and buildings, equipment, machinery. Are those accounts? Yes. Right, so if I wanted a list of accounts, I would ask the accountant for a trial balance. That's what I would do. Okay, give me a list of accounts, give me the trial balance. A reconciliation is a process of checking. The bank recon is something that you need to do. We'll look at that later on. Okay, we need to check. Checking. Internal controls, that's just background information regarding how businesses operate. Businesses need to keep accounting records. Businesses need to keep this. Where is it? Record keeping. There. Right. To summarize all of this, you can just say record keeping. Every invoice needs to be kept. Every source document, every deposit slip, every EFT confirmation, whatever it is, okay, it needs to be kept. Right, you might still see old things like checkbooks. In today's world, a checkbook has almost no relevance because hardly anyone uses checks nowadays. Why? Because it's open or to fraud. Okay, because before you could get a checkbook and write out whatever you wanted to, and you could give payments out like that. Okay, even if you didn't have money in the bank account. Why? Because they'll only find out later when they try cash the check, and then there's a problem. Okay, so just bear that in mind that yes, the textbooks might be a little bit outdated because they still talk about checks and checkbooks, but it's still a form of payment. Right, then you've got the framework. Here they talk about IFRS and the conceptual framework. There's still background information. This is something we spoke about, which was the rules, and that's what you're going to that's what you guys are going to study. NB. Okay, assets, liabilities, income, expenses, capital, drawings. Those are the rules. We just need to apply them in different scenarios. Okay, there's a note about policies. There's, even some theory, background, going concern, accrual basis. Oh, this one I didn't have on my notes. Let's discuss it. Okay. Right, so I spoke about income. Maybe if you want to, you could even add it to this page here. Let me open up those slides again. Yeah, let's go back to the income one, financial position, performance. Here's it here. Okay. We can add something to here. We can add the word accrual. Accrual principle. Right, and I'll show this to you. This is on page 20. Okay, so what is the accrual principle? Right, you can read the paragraph if you want to, but I'm going to just explain it to you simply. Okay. Right, you guys are running a business and you are running a law practice. Okay. As a law practice, you are going to have a client, and that client has asked you to register a bond for them. No problem. Register a bond. Okay, the client says they're not going to pay you until you've registered the bond. Okay, so you do what you're supposed to, and you've rendered the service. And the service was completed on the 1st of August. The client is away, and the client only comes back next month. But you've done what you're supposed to. Right, are you going to recognize income? So do you only recognize income when the client comes back? Or do you recognize income the day you rendered your service? Exactly. Okay, what is income? Income is an increase in benefit. As soon as you earn, so income, if you want to add a word next to income, the word is earn. Earn. Okay, so I don't know how many of you are working, maybe full-time, part-time, whatever the story is, okay? But if you're working, okay, when do you get paid? At the beginning of the month or at the end of the month? At the end of the month. So when you go into work on the 1st of the month and you've been working for the first 2 weeks, have you earned income? Yes, because the employer is required to pay you for 2 weeks because you've worked 2 weeks. Right, but yes, you only get paid at the end of the month, but that's not the point. The point is the accrual principle is being used. Okay, meaning income is recognized. Okay, remember that word recognize, recognition? Okay, we recognize income when you earn income. Right, so if you've rendered a service to your client and they haven't paid you, that's not the point. The point is you've earned it. Okay, you've rendered the service. You've done the job. You've done what you're supposed to. Okay, you've earned that income. Expenses, the key word there is incur. Right, so if I use water and lights, when do I pay for it? At the end of the month or the next month generally. Okay, why? Because they normally bill you for what you've used. Right, so when I'm using the water and electricity, I'm incurring an expense. Whether I pay for it or not, that's not the point. Okay, the point is you've incurred the expense. The expense is an outflow of benefits. Okay, incur an expense. Right, so that's something to add to the slides. The accrual basis. Right, the accrual basis is normally compared to the cash basis. So I see it's not here, but you can write it in versus cash. Okay, so it's accrual versus cash. Cash is when I receive money and when I pay money. Receiving money and paying money isn't a transaction. Well, it's a transaction, but it's a different transaction to when you earned it or when you incurred it. Right, so when you render the service to your customer, have you earned income? Yes, you have. Okay, the cash occurs later on. Yeah, well, there's two transactions actually. Okay, so let's write that down. Credit sale. When do you sell? Today. Let's just use the date 1st of August. Right, if you sell something on the 1st of August and the customer has 30 days to pay, do you think they're paying you on that day? No, they'll probably pay you next month. Right, so the credit sale, are you going to recognize the sale on the day that you made the sale? So you're running a business, let's say this is a retail store. Okay, someone comes in and they buy the phone, but they don't pay for it. When does the store record the sale? Yes, the day they bought the phone, right? Not the day they come back and pay for it. That's separate. Okay, so two different transactions. Transaction number 1, sell something on credit. Transaction number 2, receipts from the debtor or the customer. Okay, so 10 days later, 20 days later, 30 days later, the customer comes back and says, here's the money for the item that I bought from you. Are you going to record that transaction? Yes, but you'll record it as a receipt from the debtor, not a sale or a cash sale or a credit sale. Okay, because the sale occurred when the sale occurred. Okay, so the point I'm trying to make with this is that the accrual basis looks at the transaction in terms of when it arises. Transactions arise. Okay, so when a transaction arises, you record it. Doesn't matter what it is. If I give money to the business, what is that transaction representing? It's representing? Oh wow, that works. Okay, maybe it's just the connection here, the plug, or the... Okay. Right, the accrual basis is when the transaction arises. Okay, so if I have a sale, I have a transaction. Okay, if there's a receipt, I also have a transaction, but it's a different transaction. Okay. Right, so coming back to that, you can add the word accrual here. That's important. Does that apply to assets and liabilities? No. Okay, assets are assets, liabilities are liabilities. Okay, yes, there are considerations there for those transactions, but they're separate. Okay, relevance, materiality, nature, this is all background, this is characteristics, more characteristics, lots of theory here actually. Okay, activities, describe the 4 forms of ownership. Okay, we've looked at that. We've looked at this, that's fine. Okay. Right, learning unit 2 was what I described to you earlier, so I want to get to some activities to try some application with you. Okay, there's the word asset. If you guys want to highlight what I gave you in the notes, resources controlled by the entity, inflow of cash or benefits. Okay, it's just longer. Right, I just summarized it. Inflow of benefit, resource, those are the two main important words. That's what you study, that's what you remember. Okay, you can use the note. You don't even have to go and study this. You can if you want, it's up to you. Right, I would definitely go through this though at least once. Right, liabilities, keyword, obligation. They've looked at debts, representing the outflow of benefit. Okay, the right word from IFRS. So IFRS describes it as an obligation. See, here we can improve the textbook or the study guide. We can add the word obligation here. Okay, IFRS actually uses the word obligation. Okay, like you guys use legislation, you use case law and things like that. Accountants use IFRS. They use those books. Okay, it's actually a book with rules. It's like your constitution. It's like a book. It's rules, and you study that stuff, and then you use it. Okay, so same thing applies here, just slightly different application or different discipline. Okay. Owner's equity we spoke about. There's the note C, basic accounting equation. Right. The textbook is actually quite limited compared to the previous one. Remember I said the module has changed slightly. They've taken a lot of the practice stuff out. I mean, by now I would have been looking at activities, but it's all theory still. Yes, I've got that as well. Yeah, we'll open that just now. Okay, but here they don't give much either in terms of practical. Okay, so income, expenses, we spoke about those. Keyword, if you want to highlight, there's the keyword. Increase in benefit, decrease in benefit, straightforward. There are examples though. See, the textbook gives examples here. Sales, fees, interest, dividends, rent, gains. There's a lot. Some you don't cover, some you do. Gains you won't. Decrease in benefit, they've given you some examples here. Advertisements, purchase of trading stock. Okay, be careful of this one. I'm going to give you notes covering stock. Purchases is an expense. Inventory or trading stock is called an asset. There's a difference between the two. You'll only know the difference once we've covered the two different systems, periodic and perpetual. Inventory is an asset. Okay, I will contrast that later. There is a slide about it in your notes. Okay, but just to give that information to you now, because you might be thinking, ooh, see, it's purchases of trading stock. Okay, the purchases is an expense. Purchases is an expense, okay, because it's periodic. Okay, I don't expect you to know this because we haven't covered it, right? I'm just giving it to you ahead of time. Inventory asset, perpetual. Once we've covered it, it'll make sense. Perpetual. Okay, the double entry system we spoke about. There's the account. So, okay, nice. They've given a nice picture. There's the account name. Remember, debit refers to the left-hand side. Credit refers to the right-hand side, and that's it. Notice there aren't any pluses and minuses here because different accounts follow different rules. Okay, you have all 6 rules in your notes. This is what you study. Okay, those are accounts. This is one account. This is one account. An asset can be vehicles. So I can have vehicles as one account. What is vehicles? An asset. If vehicles is an asset, I have a plus here and a minus there because it's an asset. Does it make sense? Okay. If I spoke about sales, is sales an account? Yes, sales is its own account. What account is sales? Income. What rule does it follow? Plus here, minus there. Okay, and that's why it's just generic. Account name, this name could be anything. Asset, liability, income, expense, capital, drawings, any one of the 6, and any one of these 6 could be broken up into other things. Okay, sales is an income. Rent income is an income. Interest income is an income. Okay. Right, let's go back. Let's see what else they've given you here. Okay, there's the rules. There they. Assets and expenses, so they've grouped those two. Okay, you've got it here. There's the asset, there's the expense, same rule. Liabilities and income, there's the liability, there's the income, same rule. Okay, you can study the slide. Here we go. First, transactions. Okay, now we've got something we can actually talk about. Right, so this is application. See, this is how we use the rules. Okay, so this week, all I'm giving you is basics. I'm giving you the 6 rules, and I'm just showing you how to start using them. That's it. Okay, later on we'll get into more details. Right, so here's the first example that I can describe with that I can discuss with you. Okay, the textbook describes the transaction as a business buying equipment per check. Okay, so that's what I would do. I would highlight those words. Okay, I would put a bracket around this word, equipment, and I would put a bracket around the word check, or the word, or the amount 2,000. Either or is fine. Okay, so what must I do? This is a good time to maybe give you that rule again. Elements. Step number 1, give me the accounting element. So what elements do I have here? Okay, what is an asset? Equipment is an asset. Good. Let's write asset there. Okay. What else? What does the word check refer to? The bank, exactly. So when you see check or when you see 2,000, you're thinking about bank because that's the account. Notice I'm using the word account because an account has an element. Okay. What element is bank? Yes, you can write that next to it. Assets. Right, so see, this is the workings. This is what you do when you get a transaction. Okay, so I get a transaction, I read it, I highlight stuff that stands out. Okay, so what stood out? The word equipment and the word check. Okay, you'll see why I highlighted the other stuff when we discuss it now. Okay, but that's the first step. Step number 1, give me the element. Step number 2 is there an increase or is there a decrease? Okay, so what is happening to your asset if I'm looking at equipment? What is happening to equipment, guys? Okay, so what does it say? The business buys equipment. What is going to happen to your equipment? Exactly. Does everyone agree that this is going to increase? Okay, now I go to the rules that I study. Okay, I don't expect you to know these. I just gave them to you today. Okay, assets increase where? There. Do you see that? Okay, is everyone happy with that? Okay, so this is what you study. I study this, I know this, I remember this. Okay, I write it down or I look at it. Okay, I'm going to look at it because this is the first time we've seen it. Okay. What is equipment? An asset. What is happening to the equipment in this transaction? It's going up because you're buying equipment. So where do assets go up? On the debit side. Right, so what are you going to do to your equipment? I'm going to show working here. You're going to debit equipment. Write this down because this is how we do workings. Asset increase, asset arrow up. Okay. There's the first half of the transaction. This is a double entry. Right, and what did you use to buy equipment, guys? You used cash, you used money, you used the bank. Right, so what is happening to bank? It's decreasing. Does everyone agree with that? Decrease. See, there's my workings. Bank is an asset, it is decreasing. The elements, I've done the increase and decrease. Now I'll go back to my rule. Where does an asset decrease? On this side. Does that make sense? Okay, so what do? I write that down because that's my workings. Okay, this little bit here on the top, I do all the time. Okay, that's practice, that's analysis. I'm going to give you some homework and you can go look at some activities to try this. Okay, I'm going to do more with you next week as well. Okay, so debit, equipment, credit what? Bank. What is it? It's an asset. What's happening to it? It's going down. Okay, there's your double entry. Okay, so you can study things for what it is. So for example here, bank, what is it? It's an asset. You can put an A there. What is happening to the asset? It's decreasing, put an arrow down. That's why you're crediting it. Okay, this textbook's a bit better because they explain it better than the last one. Okay, there's more explanation. Right, if you read this, I'm reading some of it. It's actually quite good. Okay, equipment. What is it? It's an asset. What did we say is happening to it? It's going up. So what are we going to do? Debit it. There we go. See. Okay, you can write it like that in a T account, or you can just write it like this. Either or makes no difference. This is better because you can use this in different applications. This is only for a T account. This can be used for journals, for ledger, for whatever. Okay, debit equipment asset increase, credit bank asset decrease. That's everything that I need. What is that? That's the analysis. Okay, by writing that down, you know what that transaction is saying. Okay. Right, here's another one, guys. Help me with this one. A business receives a loan from the bank. What are we going to highlight? Okay, receives a loan from the bank. That's fine. You can highlight more if you want to. I'm just going to highlight that. Okay, what words stand out? Loan and bank. Good. Okay, what is the loan account? Perfect. You know a loan is an obligation. It meets the definition that we saw earlier, liability. What is bank? An asset. Good. You've done step number 1. You need to know what you're dealing with. I know I'm dealing with an asset. I know I'm dealing with a liability. Right, if I'm receiving a loan from the bank, what's happening to the loan? Yes, it's going up. Before you never had a loan. Now you have a loan. The loan has gone up. Increase. Okay, where do liabilities increase? Go look at the rule. Have a look. Liabilities increase where? On the credit side. Okay, so what am I going to write next to this example? Let's write it here. There's more space. Credit, loan, bracket, liability, increase. Arrow up. Okay, that's what I would do. That's my little working. Okay, you can think about it. You don't have to write it down. When you get used to this, you can just do it mentally. Okay, I'm writing it down so we've got it. Okay. Right, what else did we say is part of this transaction? The bank. Do you know what bank is? Yes, bank is an asset. What is happening to the bank account? Why do you say it's going up? Yes, because if you take out a loan, is the bank going to send money into your accounts? Of course they are. Right? You take out a loan, you owe them, but they give you cash. So the bank or the asset is going to go up. It's going to increase. Okay, so notice you don't have to have an increase and a decrease. You don't have to have two different ones. Okay, you have to follow the correct process. Get the element, get the increase and decrease, the rest takes care of itself. As long as you remember these 6 rules, you can do it. You can do anything. Okay, so let's go back. Asset increase. Where does an asset increase? Here. Debit side. So what do I write down for this one? Debit, bank, asset, increase, and that's it. Okay, now you've done your working. Right, so now you can see where this came from. So the answer here, bank account, if you want to add to the answer, just do this. Liability, increase. That tells you why they've done what they've done. Okay. Right, yeah. I like their layout this time around. They've given more explanation. This is a lot better. Before, the UNISA textbook never did that. Okay. Right, here's another one. Okay, this is a good one because we're dealing with an expense here. Okay, very important concept to understand here when we look at this expense. Business pays the telephone account of 550. Keyword, telephone, pays, and what are they paying? They're using cash, they're using bank. Okay, so that's what I would write down there. I would highlight that bit. I would put a bracket here for telephone, a bracket there for the amount, and I'd write the word bank there. Okay, because now I know what they're talking about. Okay, I'm interpreting the transaction. Okay, if I know what the transaction says, then I'll know how to account for it. Okay. Right, do you guys know what telephone is? Good. Telephone is an expense. Once you use the telephone, it's gone. Okay. Well, when I say gone, I mean the call. Okay, making the telephone call. All right, so telephone is an expense. Okay, if you make a call and you have an expense, did you have an expense before? No. Okay, do you have an expense now? Yes. Okay, so remember, accounting is accounting or recording transactions. Okay, so before, did I have a transaction for an expense? No. Do I have a transaction for an expense now? Yes. So am I going to record an expense or not? I am. So has the expense gone up or down? It's gone up. You have more expenses. All right, so just remember that. It's not you're paying the telephone expense. So don't think about that as being you're paying it off. You're not. You're recording the expense that you're paying. Okay, that's the key. Right, so expense increase, bank. What is bank? Good. It's a resource. It meets the definition. If you're paying, what's going to happen to the bank? It's going to decrease. Now we can go back and look at the rules. Telephone expense increase. Where is telephone expense increase? Well, there's the expense, there's the increase. Debit for the increase. Make sense? Okay, so what am I going to write for this one? I'm going to write debit telephone, bracket expense arrow up. That's why I'm debiting the telephone. Okay, bank we said was an asset that's decreasing. Go to your rule, you've studied it, you look at it, there's it there, right? Assets decrease where? On the credit side. So that's what I'm going to be writing down here. Credit bank, asset decrease. And there's everything. See, this is the little working that you need. Okay, whatever you're doing, bank recon, journals, ledger, it doesn't matter. Counting equation, you need this. Debit, telephone, credit, bank. Okay, are there more? Yeah, there's a few more. Let's look at the rest. Okay, and then we can call it a day. We're almost done. Okay. Assume a business receives 3,500 cash for services rendered. Okay, let me give you guys a chance to do it. Okay, you highlight, you circle, you underline, you put the right workings in. Okay, then we'll discuss it. just a comment about the assignment. I know you guys have to submit it on Monday, so you guys came in late. Just add your email address to the register. My email is on your set of notes. Okay, the first, I think, page 2 or something. Right, so if you don't get the answers from me, check tomorrow. I'll probably do it tonight, and then I'll upload the video. So the course is being recorded, and I'm just recording what's on screen, so what's here, and the audio, and then your email addresses, as long as it's a Gmail address, I will assign access to you, so you will be able to watch this again and again and again if you really want to, okay, just as an additional benefit, so you don't miss out if you are away or you don't get to attend for whatever reason, okay. All right, so the assignment, you guys can't do journals yet. Journals we'll cover next week, so you can do half of it as practice after having had today's lesson. Okay, so after today, you would be able to do the theory. You guys probably will be able to find the answer, but for example, debits and credits you can do. Interpreting transactions you can do. So you could probably end up until question 9. So you could do 1 to 8. Right. There's quite a bit of theory here. I see they talk about the conceptual framework. Something like this is a transaction, which is what we're doing together now. Okay, we're interpreting it. Okay, what do we debit, what do we credit, and why? Okay, so after today, you can go home and you can do question 1 to 7 as practice. I see the second book that UNISA has given you is for the additional questions. Question 1 is out of 22 marks, 26 minutes. This even looks like a past paper. Okay, so you will get past papers later on. I'll share that information and share the content with you. This is an activity you can do after having covered what we covered today. Okay, what is it? It's interpretation. Don't worry about the accounting equation, because that we can always look at next week. But what you should be able to do is analyze and interpret the transactions. Okay, so what I'm going to do is I'm going to start covering 2 of them, and then you can cover the rest. Let's just go back to the textbook, which is this one. These examples have been completed for you, and because there's this explanation, I think you guys will be okay with what we've covered so far. Right, so I just want to start you guys with an activity and give you some stuff to try on your own to see how you're doing. Okay. Right, week 1 is just rules, definitions, and how to use the double entry. That's it. That's all we really did this week. Okay, but it's so important. If you don't know how to identify what something is, and you don't know how to identify the plus or the minus, the other stuff gets a little bit more difficult. Okay, so in this week, just try get that right. Okay, go over the definition, study it. Go over the rules, study it. And then just go through more examples to practice. Okay, so this is the one that I asked you to look at. I would have highlighted this, the cash, and I would have highlighted that word, services rendered. Okay, when you highlight the word cash, you would have written bank. Okay, cash affects the bank. Bank is an asset. The asset is increasing. Where do assets increase? On the debit side. Okay, how many of you got that right? Well done. Okay, and you guys have never done accounting before. Right, so it's not that bad. Okay, that's what you always have to do. You always have to get the basic calculation. Okay, the basic working. That's the basic working. Now I can take this and I can do an accounting equation if they want me to. I can take this and I can do a journal if they want me to. Okay, but you need this. Services rendered, you should know, is income. Income is increasing because you're rendering a service. Okay, you gave someone a service. Right, what happens to income when I increase it? I credit it. There's it there. There's the credit. So you would have credited the services rendered because its income is increasing. Makes sense? All right, I just want to check. The rest you guys can probably go through. Yeah, here's one. See this activity? Okay, learning activity 2.1. This you guys can also analyze in terms of assets, liabilities, income, expenses, capital, and drawings. Right, this you guys can try. Okay, try highlight keywords. I'm going to help you with this one. Okay, the additional exercise, and you can look at some of them. The workings here, looking at the pluses and minuses, don't worry about this. I'll show you how to interpret that. when we look at debits and credits. Okay, the key is just get the debits and the credits. Okay, so let's do 3 here, and then let's do 3 here, and then you guys can have a look at the rest. Okay, once we've got the workings, then it's easy to do the calculations. Okay, so I'm going to do this on a separate page. Okay, activity 2.1, page 23. Okay, 2.1, page 23. Okay, so I'm going to do the first 3, and then you guys can complete the rest. What I'll do for you is I'll show the rest of the workings here, and then I'll email it to you, and you can check it if you want to. Okay, but please attempt it yourself. Try it. Okay, you won't know if you can do the interpretation unless you've tried to do the interpretation. Alright, so the first one, let's do together. Here, number 1. The owner makes a capital contribution of 20,000 in the form of a check. I would highlight this, capital contribution, okay, and I'll highlight this, check. Okay, those are the 2 words that I would highlight. If the owner is contributing capital, capital is capital. Capital is capital. Capital is its own account. Okay, that's the easiest one to identify. So what do I write down? Capital. Okay, what is happening to the owner's contribution? Is it going up? Is he giving more? Is he giving less? He's giving more, so it's increasing. Okay, so it's a credit. See, there's the working. Right, what did the owner give? 20,000 in the form of a check. So it is bank. Good. So see, the word check relates to bank. See, I'm literally putting extra steps here. Okay, what's happening to the bank? Bank is an asset. What's happening to it? Increasing. Where does bank increase? On the debit side. See, that's what I need you guys to do. Okay, if you guys can do that, you know how to do it. Okay, so I'll do it for all of them, and then I'll send this to you as well. You can have a look and check. I'll do another one. Let's do another one here together. Received 1,000 in cash for services rendered. Highlight the word cash, highlight the word services rendered. See, that's my key word. Okay, so if I'm looking at workings, this is number 4. I would have done this. Cash leads me to think about bank. Do I know what bank is? Yes, I know bank is an asset. What is happening to the bank if I'm rendering a service? It's going up. Then I look at my rule. Look at your rule. Where does assets increase? Debit side. See, that's how I got it. Okay, I'm using this. I'm applying this. Okay, let's look at the other half. Services rendered. Okay, we spoke about one similar. Services rendered is what? Yes. If I'm rendering a service, do I have more services rendered or less? I have more services rendered, it goes up. Then you look at your rule. Here's my rule. Where does income go up? Here's it, credit side. And that's how you do it. Okay. Right, so just keep doing that with more, and then it'll get easier and easier and easier and easier with more practice. Okay, so I'm going to do one more, and then I'll finish it for you. I'll email you the rest of this one, and then you guys can check after having tried some of these yourselves. Okay, purchased equipment per check. Those 2 words stand out for me. Check and equipment. Right, so number 9, the word equipment needs to be identified in terms of an element. Okay, equipment is an asset because it's a resource. I go back to the definition. Resource controlled, blah, blah, blah. Okay, so I know this is an asset. What is happening to the equipment if I'm buying it? It's going up. Look at your rule. Where do assets increase? On the debit side. Now I've got it. There's the thought process. That's what you need to get. Okay. Right, next one. Next half. Per check. So I purchased per check. If I'm buying per check, check tells me I'm thinking about bank. The bank is affected. Bank I know is an asset. If I'm using money from the bank, the money is going to go down, decrease. Look at this rule. Where do assets decrease? On on the credit side. Brilliant. There's another one. Okay, you guys have the rest to complete. I'll do the rest as well. I'll finish this off in the Excel and I'll send it to you. You can check your workings. Okay, let's look at 3 of these. Okay, so I'm going to do that and then I'll send it to you, and I'm going to do another one for you and I'll send it with this. Question 1. This is actually a past paper. Looks very familiar. Okay. What page is this? Page 4. Page 4, second book. Right, I'm not too sure if they give you answers. If they do even better, then they've really improved the course. Normally they don't. If they do, great. Okay, then you can even check it yourself. Yeah. Just for the second one. And in the first one. Okay, that's really good. So. Oh, okay. Sure. All right, so let's do this one. Let's highlight and circle and underline. Where's my writing? Let's get the writing pad. Okay. Right. Owner, Tom, deposited 9,500 cash into the business bank account as additional capital. Keyword, deposited cash, additional capital. It's a giveaway. Do you agree? Okay, so I'm going to use the better format for these workings. Okay, so this is how you should show it. Debit bank, asset increase, credit capital, capital is capital, credits. Okay, you don't even have to write anything for that one. Okay, it is what it is. Capital's credit, capital starts with a C, capital's credited.
What is the second book?
Second book is Tutorial Letter 102.
Oh, okay. I don't have that one here. It's online.
Yeah, so I've got the study guide, which is that one, the 501, then I've got the 102 and the 101.
Oh,
Yeah. Okay, so I'll write that down. It's a good question. Maybe
no, it's fine. I just don't have the second one with me.
I'll email it to you. Okay, 101, 102, book 102, book 102. Okay, you can download from my Unisa. It's on there. Okay. All right, perfect. So you've got that. Okay, that's ideally where you want to go. So this is like all my thoughts splashed on that little page. Okay, this is a neater answer of the workings that you need to get. Okay, this isn't neat. This is just the step-by-step process. Check, bank, asset, decrease, credit. Okay, right, this is what you want. Okay, next one. Purchase stationery from Renko on credit. On credit is important. Purchase stationery is important. Okay, so what am I dealing with here? I'm dealing with the liability. If it's on credit, do I owe someone something? Yes. Okay, we'll learn more about this later. I've got notes on it. Okay, a creditor is someone who you owe. Okay, a debtor is someone that owes you. All right, but you see, we haven't covered enough yet. Okay, but I will discuss that. Okay, so try it and see if it works out. 7. Okay, so what did I buy? Stationery. Stationery is an expense. Stationery is increasing because I'm recording an expense. And it would be debited, exactly. Okay, so let's wrap that out and let's put this here. Okay, debit stationery expense. Right, credit, the creditors, bracket liability increase. Okay, the word creditor refers to a supplier who you've bought from on credit. Okay, the supplier is called your creditor. Is that alright? Okay. And then the last one, number 9, service fees charged to B for 85850 cash, that's important. Service fees charged to B. If you're charging something to B, B is your customer. Okay, you charge your customers. Okay. Was correctly entered in the fees journal. Don't worry about journals, we'll cover them later. But posted to the account of another client B. The error must be corrected. Okay. That one's a little bit more advanced. Okay, so this was correctly entered in the journal but posted to the account of another client. Okay, Moyo instead of Mayo. Okay, so looking at what they've given you, the dish information. The dish information is past papers. You're not going to be able to do the past papers if you haven't covered more content. Okay, so looking at this, this is if you want to challenge. Okay, try that if you want to challenge. This is easy. This is what you can do with what you know already currently. Okay, because errors you won't be able to do yet. And that's why I'm saying rather not do this then if you don't want to challenge. Okay, rather just focus on these activities. Okay, so looking at how they've structured it, the learning activities are better to do because they're following the content that was covered previously. This, yes, this is the first annexure, this is the first additional question, but this question is not just covering chapter 1. Okay, it's covering a lot of other things as well. Okay, so just bear that in mind, that this will require more content, so I'd rather you not do this, do these later. This would be like past papers, okay, but this you guys can all do. So you can do 2.1, don't worry about how they've laid out the answer. I'll show you the right way of doing it. If there aren't too many, I'll do all of them for you and I'll email it to you. There's 2 I see here. There's 3 I see here. How many did they give you? 4. Is that it? Okay, so there's 4 that they've given you. There's 5. No, 5 is what? Using the information, the transaction. Okay, counting equation. Yeah, don't worry about that. Let's just get the analysis right. That's the main objective. Okay, but I don't want you guys to stress too much about those additional information questions yet because, as I said, you haven't covered enough material yet. Okay, so it will be a challenge to do those activities. It won't be a challenge to do these activities. Okay, 2.1, 2.2, 2.3, 2.4, those you should be able to do with the right workings. Okay, so I'll do the workings for you. I'll record them here. Next week, I do want to discuss the accounting equation, so how to answer that as a question, and how to apply the workings. But let's just get the workings right this week. Okay, get the analysis right, know what you're dealing with in terms of the elements, and then practice interpreting and analyzing transactions.